What's going on, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is October 18th of 2022. Let's dive into today's price action. The trend model did flip to a +3, which is awesome news. You can see we had the S&P 500. It finished up 1.17%. We had our NASDAQ QQQ finishing up 0.79%. Our IWM small caps were leading up 1.19%. Dogs of the Dow up 1.13%. The ARK Innovation ETF was our big leader up 1.62%. And even TLT, the long bond, it's not necessarily bouncing higher with force, but it is moving sideways to slightly higher, which is giving the market some room to breathe. This is awesome stuff. In terms of the day's range, most of these indices, they did close towards the low end. We had a pretty sizable gap higher this morning. It was like a 2% gap. And that gap was sold into. I don't blame any investor for selling into that gap. I actually did the same exact thing because we had some binary events coming down the pipe. We had Netflix earnings, which ended up turning out pretty strong. And then we also had Tesla earnings coming up as well. So like if you have a 2% gap, market was just up over 2% the prior day. It's sort of like a no-brainer. So I try not to overthink it too much. Volatility did contract across all of these indices, but we're still not really seeing that big crush in volatility. Breadth was very strong. Small cap breadth 72%. Up volume was 82.2%. So all systems go for now. Today's economic data, not a whole lot that was market moving. Again, the big data points for this year are the inflation numbers, the employment numbers, those kinds of things. We had industrial production, kind of a nothing burger. I don't even think the market really traded off of it. We had this NAHB housing market index. This came in lower than expected, which is good. And then we had Federal Reserve's Kashkari, who did a speech at 5:30 p.m. And let's take a look at what we had today in terms of news. The big news was Netflix ended up reporting EPS of $3.10, which beat the $2.13 estimate. Their sales also slightly beat the estimates. Here's what's interesting. For Q4, they see 36 cents of EPS compared to an estimate of $1.12, sales of $7.776 billion versus $7.97 billion. So they crushed this quarter, but then they guided down for the next quarter. Now here's the thing. Netflix was trading so far down in the dumps. The stock was down like 65, 70% heading into the earnings report. We've been talking about this ad nauseum that most investors are heavily positioned in cash. And when you get that dynamic, it becomes a very easy hurdle to clear for these stocks. We shared this earlier with Pristine Capital members. We actually posted this one on Twitter as well. These are our earnings insights. We try to take a look at what happened in the past to give us some context for what the market is expecting. Well, the market maker implied move was 12.2%. And as of right now, the stock's moving about that much in the after hours. VIX Futures term structure. This still remains inverted. So we are not out of the eye of the storm. For whatever reason, the market is still thinking that things are pretty touch and go. So on the one hand, we can't say we're out of this risk event, but on the other hand, that means there's a lot of rally fuel if things end up going okay in the market. Because when this VIX Futures term structure uninverts and we do get that vol crush, that could lead to a nice multi-percentage move if it happens. Finviz Heat Map, we did have some green across the screen. The aerospace and defense sector was very strong. I never like to see that. You can see energy was relatively weak. Tesla, ahead of its earnings report, did have a pretty massive gap higher, and that gap was sold into. Again, I don't really blame anyone for doing that with the unknown event coming down the pipe. Sectors, what did we see? Again, top performer, aerospace and defense. Cannabis stocks were up 3%, which is pretty fantastic. What else do we have? Solar stocks up 2.78%. Pretty solid day all around, I would say. But yeah, this aerospace and defense moving into our number 2 momentum slot. Do not really like to see that. Also, if I direct you over to this implied volatility change column, you can see the implied volatility did come down for most of these sector ETFs. Style factors, what was the outperformer? High beta, exactly what we want to see. In terms of trades, what did we do? I closed out my array common shares. This is a solar stock. I originally sold puts on it, held on to this thing way too long, not gonna lie. Poor process here. Closed out for 15.52. I had paid 19.05. Luckily, it was a pretty small position. This is one of those upward and onward. Made a mistake, move on, get better from the mistake. And then I also closed out 30% of the AEHR common shares for 18.31. Had paid 15.61. And we're just taking a profit target as per the setup on our Pristine Capital weekend watch list. Luckily, this was a much bigger trade, and we did take off just a piece of it. AEHR still looks fantastic. We'll pull up the chart in a moment. Let's check it out. So AEHR, while we're on that topic, boom, up 10.12% today. And look at this stock. We outlined, the full rationale for this one in our weekend watch list video. And yeah, we took this one right off the open yesterday, already putting in a pretty nice move. I would imagine if the market continues to be upward trending, then this stock is likely going to be the first of the bunch to break out to new swing highs. So looking for a move up to that 2039 level. Array, let's look at this one. This was the one that I closed out for a loss. It's always important to look at these two because these you can really learn a lot from. So this one just, I don't know, it just looks horrible. Held on to this one for too long. Poor process here, honestly. And I think it was just like this slow leak lower. At one point, I did kind of lose track of it. Then all of a sudden, I look back and it was like, holy, I'm down big on this position. So I think I took like a 20% loss in this one. No bueno. I think it was less than 20, but still pretty bad. Pretty embarrassing, honestly. Array. Yeah, could this thing end up just zooming back to the high pretty quickly? Absolutely, it certainly could. But it seems just as likely that we test this 200-day simple moving average. So I was like, I'm done with this thing. Anyway, those are 2 trades for today. Let's take a look at the market. And what do we have? The S&P 500 was up for the day. We have triggered the bullish 80% rule, which means once you reestablish yourself inside of this value area, there's a higher probability that you test the opposite side of value. That would be a huge monster move up to 41.42.25. As of right now, I'm really looking for this move up to 39.02.75. I think that's pretty reasonable. And I think most market participants are not really expecting it. One thing I want to direct your attention to is this 20-day simple moving average. We closed above it, team. Last time we did that was right here. It was right ahead of the CPI report, and boom, we just cascaded lower. But for tomorrow's session, I don't really see a catalyst that's really going to do that and just cascade the market. So overall, I see this as a good thing. Now it's a little bit tougher to justify staying in cash because now we're above that short-term moving average. Let's take a look at our NASDAQ. Boom, up in the after hours on that Netflix earnings report, also above the 20-day simple moving average, but not yet inside of value. Russell 2000, this one has been a nice leader. We're above the 20-day SMA for the second straight day. We're also having a small gap higher in the after hours. And our Dow Jones, dogs of the Dow, also moving to the upside. So pretty good action here. I gotta say, the only thing that is a little bit concerning is this ITA, aerospace and defense. Never a good thing when this is one of your top momentum movers. There was a story out, and it was that one of our defense guys pretty much said, hey, we believe that China is actually going to make a move for Taiwan earlier than we thought. So it's not good to see that news story and then seeing ITA just rip out to the upside. That is definitely a risk factor to keep an eye on. But as of right now, the trend model's at a +3. So we're going to run with the bulls. With that being said, I hope you all had an awesome trading day. We will see you all tomorrow.